Okay, guys, welcome to our Coaches Show. Again, I just got the recording up and running, and we always record that through tackletrading.com and post up the Coaches Show later so that you guys can come back and review anything that we discussed. My name is Tim Justice. I'm here with my buddy, Noah Davidson. Noah, good to have you today.
It's good to be here.
Yeah, excited to talk about quite a few things. A lot of volatility in the market. Attendees here live, Ali, Mario, Melanie, and Owen. If you can locate the chat and type something in, let me know. You kind of have to navigate your go-to meeting window. There's a chat feature in there. And I think we've got a phone caller. You're live on the air, caller. Go ahead.
You tell me we're live on this right now?
Hey, what's up, Matt?
Hey, what's up, T? How are you guys?
Good to have you. You know, Matt, you're on the road today. Thanks for spending some time to come in here and join us. We've got a few of our pro members with us, and why don't you tell everybody where you're at?
I am south of Vegas, north of Baker, on the road, coming home from a family vacation that spent some time in San Diego and Disneyland, and so just enjoying the nice commute back home.
Wow. Yeah, you know, we were just in a meeting together, you and I. You were on the audio there as well. You're telling me about the drive. That's quite a distance from Vegas to LA, and there's not a lot in between there if you've never driven it.
It is a very desert, boring drive. If you like sagebrush and alkali, this drive's for you right now.
Yeah. I don't know what's worse, though, that or between Vegas and Mesquite's pretty barren as well.
Oh, that's bad. That's real bad.
Yeah.
That's real bad, too.
Southern Utah boys, we know the roads.
Yeah. Oh, yeah. You have to if you're from Utah. You drive everywhere.
You know, it actually reminds me of something, Matt, because so much of my life I've spent driving. I was telling a group of students yesterday about how to build your confidence with something that you're new at. And even when you're trying to overcome a fear, I grew up most of my life. I'd never taken an airline flight until I was 25 years old. And I was fearful of it, scared to death of it, because I just drove everywhere. Drove to ball games, drove to Vegas, went on family vacations, we drove. You know, overcoming fears in a market. What would an airline pilot tell you if you told them, I'm scared of flying?
Well, honestly, as both of you, I do deal with the fear of flying, and I fly a lot. I have to fly a lot. So, like I'm going to Chicago next week, LA the week after, and I fly. So I actually all of us know airline pilots who are students, and I was sitting down in Philadelphia one day, and I got done teaching an amazing group there in Philadelphia, and there's a guy that flew for United for 26 years. Or it might have been American. It was one of the major airlines through the 757 stop plane. And I was telling him, I said, hey, listen, I got this fear of flying. How do I overcome it? And he looks at me and goes, well, he put his arm around me, around my shoulder, and says, well, you just got to stop being a wimp. That's all he said. That's it. I was like, well, okay there. I'm going to go get on my plane now. So, in terms of the market, yeah, I get we have fear, guys. I get that these things occur, and I think it is normal to fear things that we don't know. But it's like, Noah and I have a mentor. His name's Jim, and he just keeps pounding it into us. You got to take a step forward. You got to keep on moving. You got to keep on building. Just because you're scared of what's happening out there in the economy or the market or whatever the case might be, doesn't mean it's not going to happen anyways. Just because you're scared that you might lose 50% of your retirement, it doesn't mean it's not going to happen anyways. You got to do something about it. You got to control your life, and the first thing you got to do is you got to take that step. And a lot of times, the hardest part of all of it, guys, is taking that first step. The hardest part about transitioning a 401k into an IRA is making the decision to do it. When you actually, go through the process, it's the easiest thing in the world. It's a 5-minute phone call with your broker, and all of a sudden you're controlling your money. So, the hardest part is always making the decision. The hardest part is always taking that first step. So you might as well just do it. 2 feet in. Don't even test the water. Let's go get the job done.
This might be a better podcast conversation, which I can't wait for you to get home so we can do it. Because I was going to talk about the way I used to overcome my fear of flying. Not.
Drinking a lot.
Yes,
Getting so drunk you might get kicked off the plane.
Yes. Poor people around me. I had to just drink until I could handle it.
Yeah.
Well, because I don't do pills. A lot of people deal with their anxiety with I can't take pills. I have a deeper fear of pills than flying.
Hey, listen, we grew up in Utah. We know how pills affect people. No to that.
Well, and my thing was, because I've had a lot of pilots as students over the years. There's something about an airline pilot that I think a lot of them really, they have some money and they're
great traders. Tim.
They love to trade.
Great traders.
Yeah.
I mean, you talk about, real quick, I'm sorry to cut you off on that, but you think about the types of just individuals that just are born to be traders, military people, right? How many students do both of you guys have that are military? Army, Marines, it's the discipline, it's the structure. Airline pilots, great traders. And there's a commonality there, and it's that discipline and that structure that is absolutely amazing.
Yeah.
Structures and checklists is kind of the thing for the pilot. They go through their checklist, their pre-flight checklist. Same thing, pre-trade checklist. We've developed the system with step-by-step processes and checklists, and that's part of our playbook. And it really removes the fear when you have that system to go to, and you're double checking what's important to check.
Yeah, that's right. That's right. We're dropping attendees. They might be getting disconnected or something. Mario, Melanie's here as well. But, we always do these on record so that any of your pro members out there then can come back and watch them a little bit later. Now, Matt, we've got a little bit of an agenda today and some things I want to talk about. While I've got you, why don't we talk about market conditions for just a minute? And I'm going to start with you, Nolan. Let's bring up Tackle Trading's website. Let's go straight to the source here, and let's look at the Trade Center. When you're approaching any given week in a market, Noah, and here we are looking at it on a Tuesday afternoon, there's an hour left until the market closes, and then we've got 3 days left in the week. What's one of the first things that you want to know before you start making strategy decisions?
What's coming up on the economic calendar? The markets have been, the things that move the markets these days are very much information-driven, news-driven, and they're policy-driven by what's going on, with the big global economic picture. The things I'm looking for would be key data reports, and anytime the policymakers speak. So anytime you get a Federal Reserve meeting or the policy meeting or a open minutes, that's what's moving the market, because people have kind of come to the conclusion, and traders specifically have come to the conclusion that this is what is really moving the markets, is what's going on with their monetary policies, what's going on with interest rates, what's going on with quantitative easing, et cetera, et cetera. So first thing I want to know is what's coming up that could be a catalyst to move the markets. Yeah, I don't know which way they'd move the markets, but I know that the information that comes out will trickle out and traders will react to it.
And as I look at the economic calendar, and I think that's a really good tip that you're giving everybody there, the one thing that really stands out to me is the unemployment on Friday, the unemployment situation.
You start to learn some of these things, like that unemployment report comes out the first Friday of every month. Yep. So as we transition into October, cannot believe where the year's gone. It's unreal how quickly time flies. But as we transition into October, that first week of every month is when the economic reports come out for the unemployment, the official unemployment rate, and the non-farms payroll reports, which tell you how much money people have in payroll. And these have been, the first way I learned about these reports was by not knowing about these reports and wondering why the market moved so big that day, and being a little bit surprised and caught a little bit unaware that there was this information coming out that could dramatically change what I thought I was seeing on my charts.
Well, and I want to show everybody something here in terms of this trade center because, we want you guys to use all of the tools that we've built into the Tackle Trading website. The clubhouse, the trade center, make sure you're diving into the blogs and the video blogs. Definitely download all our podcasts. But just one of these daily tools, the trade center, this is where you can run your daily routine from. And Noah, look at all the data. Once you decide, okay, I want to dig into the employment situation on Friday, they have data about month-over-month and year-over-year changes going all the way back to 2011. There's some charts here that really help you with that, show you civilian unemployment, give you some explanation as to what's happening. I mean, you can really dive into a lot of the content here as to what is going on with the jobs market. And this data is, granted, from the Labor Department, so take it with a grain of salt. It is government data, as old George Bush would call it, fuzzy math, but it is really neat if you'll use the source, Trade Center. Go into the economic calendar and you can dive into all kinds of different stuff. Learning to read the calendar. It can be intimidating when you're new because you look at this and you say, well, gosh, Tim, there's 15, 20 events. How did I know the employment situation was going to be the big one? And Matt, I'm going to bring you in on this one. If you can, click on the unmute for a minute. If you could give people just 2 or 3 economic events or news-based volatility events that people need to always pay attention to, what would you say they are?
Well, Noah's dead on. I mean, talking about kind of the first thing is how we always kind of, find out what drives the market and whatnot, economically, fundamentally, technically, or whatnot. But at the same time, what I would say that drives the market, if you're looking at economically, you got to look at first Fed reports, FOMC speeches, the Fed meeting minutes, anything that really has to do with the Federal Central Bank, because this market is a monetary policy-driven market. And right now, some of the things that they're changing are so vitally important. So when we're looking at anything Fed market related, the second one is unemployment. Unemployment is so important to the Fed's monetary policy. They've been telling us for 5 years now that they were going to keep an easy monetary policy outside of unemployment being above 6.0. And then I would say manufacturing data. What we're seeing this week. We got 2 manufacturing reports this week that are going to be pretty important. So manufacturing to me is really important right now. Consumer confidence is another one that's really important. We saw consumer confidence come out this morning, and it was expected to come in at 92.2. It came in at 86. One of the biggest drops in consumer confidence we've seen over the course of the last, really honestly, 2-3 years. And so when I'm looking at that, Fed 1, unemployment 2, consumer confidence in manufacturing right now would be a 3A, 3B. And then the preliminary GDP report, which is once a quarter, would be close to those.
Well, and at some point, things will change. One thing you learn about trading, guys, is that the key economic data depends on what's moving the market at the time. I remember in 2008, 9, 10, when it was all about quantitative easing, the Treasury auctions were huge. And you had to learn that. I mean, it wasn't always historically that way. And then all of a sudden, the New York Fed has a Treasury auction. The market moves 10 points. You're like, where the heck did that come from? So you learn to pick up on data that matters. I've been reading about all this stuff that's going on around the globe. Matt, we'll have to podcast about that soon.
Geopolitical situations, those will be fun. But let me just say this about it. Yeah, economic discussions are a little overwhelming when you're first new to all this, which I know a lot of people at Tackle Trading are. They're just getting into the markets, into trading, into controlling their future and whatnot. But it's got to be done. And the first time you go to an economic calendar, whether it's at the trade center on Tackle Trading or whatever economic calendar you use, it's going to be confusing. But know this. Noah's dead right. We get these economic reports every single month. And if you just kind of start going and saying, okay, the consumer confidence report came out today, how did the market respond to that? And unemployment report comes out tomorrow with the ADP one. How did the market respond to that? And then on Friday, we get another unemployment rate on Friday morning. How does the market respond to that? And so it's going to be very important to kind of just go there and see how the market responds to these economic reports.
Yeah. And one thing I want to make a note of here, those of you who are attending live, this is a new software for Noah and Matt and myself, so we're still trying to figure a lot of this out. And Matt, you can't see this, but it looks like you guys can access the questions pane. I don't know if you can see my software when I bring it in front of the screen. No, I'm learning as I go here. So I'm getting
Okay.
questions from Mario and Melanie, about how things work. So if you can access the questions pane, definitely use that if you've got questions for us that you want us to go through. Whatever you can use to communicate with us is great for me. Now, in my version of GoToWebinar, I have this chat feature down here, guys. So when I type a message in, like test message, and I send that to the entire audience, does that not show up anywhere? Somebody will have to let me know.
They're responding under questions. It's coming up under questions for us.
I see.
So I don't know if they're seeing that or not. If we show, it's show answered questions, polls chat, the chat window. Yeah, there's the test message. I see that. So the chat window. I think that is.
It may not be up for
I
everybody.
can see your message. You can see mine, but if they can't see our messages, then that's.
Use the questions window for right now. That's not a big deal. We'll go with that. We'll try to figure out later on how to change that. But yeah, just use that questions window for right now, and then we'll see them as we come in. So Ollie, I see you. Melanie, Mario, I've got everybody here. If you've got questions as we go, just use that interface for now. We'll figure out how to get the other chat feature up and loaded next time. Okay?
Yeah, I just got a message from Owen having some technical difficulties trying to get in. So we'll overcome the difficulties. This is a little bit like learning a new trading platform. What to click on, what to point at, what do I need to do. It's a little intimidating at first. So
but,
we'll get over it.
The one thing is, and I'll tell you guys, I love this. This is an overriding philosophy here with the coaches at Tackle Trading, is that our mantra is to take care of our team first. It's team first, and so whatever effort we got to put in to make sure you guys get, good training and the good education that you're paying for, then we're definitely going to do that. So just be patient with us on a few of the technical stuff. We're still ironing all of that out. Now, let's see. Now, I do want to get into, after the economic calendar, I want to talk about this market action. Noah, in the clubhouse the other day, you were talking about the market gapping down Monday morning and possibly triggering some bears. I was all excited for that. I was looking at.
Well, I was watching how the market reacted. If you go back go over, Tim, back to the Trade Center, or to the Trade Center on Tackle Trading.
Yeah.
And what I was watching is one of the reasons when I track the market, I look at the futures because they trade overnight. And on the Trade Center, when you're looking at the calendar, when you're looking at let's see if we can get there you go. When you first log into the Trade Center, that map of the world where it shows you what markets are open and what markets are closed, the futures, what I was watching is what the Asian markets were doing. So the markets opened Sunday afternoon. The futures markets start trading Sunday evening when you see the Asian markets, when Sydney, Australia, and Hong Kong, the markets are going live because they are globally traded, and so you'll see a little bit of volume. And you go look at that when you're logging in, it shows you the little calendar, or not the calendar, but the globe, and it shows you which markets are open. Well, there's certain periods of overlap where the Asian markets are open and the European markets are open. And so during those hours when I was looking at the Asian markets open and the European markets open, the futures took a dive overnight. So people who were using the index chart, like the S&P index or the SPDR, the exchange traded fund, had a gap. The futures chart didn't have a gap because it had continuous trading. It was the futures trading down that caused the gap on the indices. And so gaps have a tendency to fill, but they also have a tendency to run. And it traded right down into the support zone at the opening. The S&P was a little bit below it, the Dow was a little bit above it, and it was basically coming into a point of decision where they were picking up where they had hit the lows last week. So what it ends up being is intraday support for the day trader types. And so people who trade futures are trading smaller time frames.
I love this view right here, by the way.
Yeah, that little view right there, that's what I'm talking about, is when I'm looking at that, I could see, and so I was up in the middle of the night, probably just because I'm a general insomniac, but you don't have to be, but that's what I check in the morning, even if I, wake up in the morning and I look at the markets. I look at the futures charts in Thinkorswim, and I look at a chart of the S&P index, and I look at the chart of so I look at the chart and I go intraday down into, and this is exactly what I want to see on the screen if you grab the ES, and you see you've changed your time frame from 5 minutes to about 30 minutes, and you'll be able to see the aggregate time there. Where the dotted lines are, the gray dotted lines are on the chart, that's market close. And the high points volume, if you could point to those at the bottom for me, Tim, those are the areas where the market's open. And you'll see that there's a cycle in the market where after the market closed, volume gets quiet. You see a small peak in between market hours every day. But there's a little bump right in the middle every day. If I go grab my drawing tool here, you give me a drawing tool?
Yeah.
Would you go up and enable a drawing tool for me so I could draw on that?
File, options.
And this is actually this would be a good thing for everybody to put in their routine. So if you were to go up to the, let's see, attendee list, let's see if I can get a Matt Justice request keyboard and mouse control. Can you do that? And then you should be able to go in and, okay, so I have keyboard and mouse control now? Okay. So okay, there we go, bam. So I got a marker. So what I was looking at Monday into the open is this, okay, so this is Thursday where the market came down really hard and established a low. And then this overnight, it went sideways, 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 and then you see this little bump right here. That is where the Asian markets and the European markets are open, and they traded up. So during that period of time, I saw an upward move, and so when the U.S. markets open and run up, I'm not that surprised. Then the markets closed, so Friday was up, and it recaptured some of the ground, and it gave us that nice bullish candle. Well, the markets closed, and then Friday you get the weekend, and then as they start trading live again, they were drifting down, drifting down, drifting down a little bit, nothing big, just a little drift. And then right here where the European and Asian markets were open at the same time, we start to see the drop, boom, and then as the trade desk, the currency desks opened, everything was dropping down, and you'll notice where it dipped down below support. So what I was seeing was that as they were getting prepared for the week and they're opening up trades, they were moving to the south. And so it came down and broke that key support zone, and I didn't know if it was going to go up or down. But that drift overnight right there is what created the gap. If you were to bring up your mock trader and look at a chart of the spider, you pop up bring that up and look at the spider change that to a daily time frame for me if you would.
Sure, let me get my point back.
Well, you can see the gap right there on the chart in the middle. You got that big gap and it shows up in here as the gap in the market price action. SP index, there you go, is it gapped. Let's go daily time frame on that. It just shows up as a small gap on the candle. You can see it on the 15-minute time frame. There's your gap. And so the S&P index traded a little bit better than yep, there you go, perfect. So you get a little bit of gap. What I'm looking for in this, and when I'm watching the markets open, and I do this every day as I see which way the futures are trading into the open, is just the psychological mindset of traders coming into the open. It came into that, and you'll see that gap here, but you don't see the gap when you're looking at the futures. You see the continuous trading, and I look to see which way they're trading the markets overnight. And when you read those headlines that say, Asian markets tank off of, fears of consumer confidence or whatever it is, it's hard to tell as the world turns which markets lead the dance and which markets are following. And they oftentimes take turns leading. So if you get a big economic move in China, for example, that could directly affect how we trade here in the U.S. If you see something happen in Europe, it's going to affect the way people trade, especially when it comes to things like currencies and major market indices and such. And so what I'm really looking for is that little bit of insight. Every day I watch which way those trade during that overlap to give me a general predisposition for the market. Does that make sense?
It makes total sense, and I love the tip. And there are a few symbols there, guys. Those of you who are listening here live, I want you to write these down. /ES for the S&P E-mini that Noah brought up. And
Yep.
then I'm going to give you another one, and Matt, I'm going to bring you back in here for a second, the /DX, the dollar index. I'm going to get both of your take on this. One of the major futures contracts that I watch is the dollar index. Now, Matt, explain what the dollar index is to everybody.
The dollar index is a futures contract that tracks the value of the dollar against, other currencies out there. There's like 6 or 7 other currencies that it will track it against. It's the ones that the dollars are traded directly against. So a lot of people who trade, like for example, we all like to trade currencies. Sometimes we trade the currency in the futures market with /DX. Sometimes we trade the U.S. dollar against another currency in the forex market. But the dollar index currency DX is one of the ones that we focus on primarily to track the strength or weakness of the U.S. dollar against its other major counterparts out there in the market.
Now, one second. Owen, who is in our meeting, I'm going to send him.
He just sent me a message. He says work beckons. He's going to catch the replay.
Gotcha.
Oh, I got you.
Work is for suckers. That's all I have to say about that.
I had the good fortune of talking to a lot of our pro members last week. In fact, I chatted with most people on the call. Ali and we spoke, Mario, Owen. And that's something I do for all of our pro members when they sign up, is give them a free coaching session and kind of just chat with them, make sure they understand how to get around the site and that kind of thing. And Owen, it was so funny. I was talking to him on Friday, and he lives in New Zealand, Matt, and it was 4 a.m. there, and he was just getting done with work because he works at a pub as a bouncer, I think, as a doorman.
I like it.
Yeah.
So
listen, I like him already.
Listen to this. So we've got members now from New Zealand. I didn't know that. We've got members from Montreal. We've got a member from Moscow. We've got members all over the world for tackle trading. I think that's pretty exciting. So
it's awesome. No, I was looking at that same thing. I mean, we have members literally from everywhere right now. I think the only continent we're missing right now is Africa.
Yeah.
Yeah. No, that's not true. I guess we've got members in India. We're all over the place. So we've got to expand that. It's kind of a neat thing. And this is kind of the topic that's really, I think, a global conversation, because it doesn't matter where you live. You can trade these instruments, access to them from anywhere. You can get internet.
Oh, absolutely.
No, I mean, we live in a global marketplace. We live in a global economy. Where there's so many of the things that we talk about in tackle trading are applicable in every market. Not just U.S.-based markets, but they're at the Toronto Stock Exchange, they're at the London Stock Exchange, over there in Tokyo, in Hong Kong at the HSC and whatnot. The things that we're talking about at tackle trading are applicable in every market, in every currency, and so it's awesome, guys, to see this brand grow and really become a global brand, and I'm just so excited about it.
Well, and it's going to be better and better the more people participate, because we really want to promote a team atmosphere. Ask questions at the clubhouse, get to know each other. Yeah.
I spoke about that in the newsletter this week, about kind of what our vision is of tackle trading and how we see this as a team, and why we call our members teammates. We refer to teammate. And it's because the things that we're seeing in the economy, the things we're seeing in the market, the things we're seeing in the ever-changing forex market with the global reserve system changing. By the way, the euro and the Chinese yuan will now be directly traded without.
Oh, we got a direct pair between the euro and yuan. That's new.
Yeah, that's it. It was just announced yesterday, actually.
So you mean they're cutting out the U.S. dollar middleman? That sucks for us.
Shockingly, right? I mean, these things. Noah, you and I have been talking about this for a year now, in terms of what we're seeing in the changing reserve system, and people can either start to learn about it, or they can watch it smack them in the face. But
Well,
the US dollar will not be the reserve currency in 10 years from now.
It's been the 10-year transition, Matt. One of the things you and I talked about probably 2 years ago, 3 years ago, was the shift of oil purchases in U.S. dollars.
Yeah.
In 2001, you had 90+% of all global purchases of oil done in U.S. dollars. In 2010, you're down 50%. And so at this point in time,
honestly, no, one of the biggest tells in the oil thing with the petrodollar was not what Iraq or Iran or any of those countries did. It's what Saudi Arabia did last year. Saudi Arabia is our number one ally in the region. Number one. They love the U.S. The U.S. loves Saudi. I mean, that's our number one ally. And now they're selling oil to China in yuan-based denomination, not U.S. dollar-based denomination. And it's because what's happening, the U.S., number one, is losing political influence. It's losing economic influence. And the reality is China is a bigger importer of oil than the U.S. is. And so when China goes to Europe and when they go to Britain and when they go to Argentina and when they go to Australia and Japan and India and Russia and all these other countries about importing, exporting agreements, they're using yuan-based denominations instead of U.S. dollar because the Chinese want to internationalize their currency. Maybe not as a reserve currency, but in terms of their own importing and exporting. And this might be bad for the value of the U.S. dollar long term. But I'll tell you right now, I actually think it might be healthy for the U.S. economy long term because it might allow us to actually stop exporting jobs.
Yeah. Well, that's interesting commentary. In fact, when we look at that, this information seems really complex and esoteric for the average person. You start talking about global economics and monetary policy, and pretty soon their eyes are going to glaze over, and they're just going to want to go check their Facebook status. But how much does this affect me in my day-to-day life? Well, it affects you every time you go to the grocery store, every time you fill up at the pump. And what's coming down the pipeline, I think, is a rude awakening. Our purchasing power is slipping. The dollar recently has been strengthening, and watching that index go has been important. But it's getting to an extreme where I think we're going to see a this is one of the things I'm going to put out a video on this week, Tim, is you look at that dollar index, it's rising, 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 rising. We look at the precious metals index, it's dropping, 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 dropping.
That will revert to the mean.
There will be a revision to the mean on those.
Yeah.
So if you want to talk about a way you can profit, well, one, if the dollar is strong and people are interested in precious metals, in buying precious metals, this would be a time to do it. And I'm actually we'll bring on a guest speaker next week. Or in the next couple of weeks. I've got a couple of guys who actually deal in spot currencies. They deal in precious metals, and we're going to provide a resource for the members of Tackle Trading to buy precious metals. They are going to be able to buy from a reputable broker at a basically better rate than you'd get from going to your locals.
That is so vital.
Having access is to understand the timing of it. That's something that's really, really important. Look at pop in /YG for me, Tim, /YG. That's the yellow gold futures, spot futures on gold, E-mini futures. And you see that they're trading down near support and the dollar's trading out near resistance. And you kind of see that there's a little bit of a range bound scenario between these two. There's a neat,
real quick, and just kind of at support resistance, and I know this would be a very aggressive trade, especially in the futures market, okay? But is there a trade that basically we could do that maybe long gold, short dollar, just in the short term as we see the dollar should come back into support and the gold contract should come back into resistance, not long term, I'm just talking maybe a 2-3 week trade. Is there a possibility? And I can't see the chart in front of me, but based on what your charting skills, is that a possibility of short dollar, long gold for a short-term revision to the mean?
Yeah, absolutely. Tim, do you mind if I take over the control real quick here? I think I should be able to move the mouse. If you let go of the mouse.
Yeah, I don't have it.
Let's see if it's going here. Let me have you pop open an indicator. Let me have you add an indicator for me here to the chart.
Sure.
Or will you create a new chart for us? Go to the grid up top and open up a second chart for me. And let's put on a dollar, put the dollar in the chart, so DX/DX, and then add an indicator for me. Go up to the little add indicator and let's put on a correlation indicator. So add a correlation indicator, and then we want to edit this indicator. It's currently setting it to the S&P index. Change that from the S&P to the YG/YG. And wait, we're looking at the one chart did I tell you to put in the dollar or the yellow gold? I can't remember now which one I put you in.
We got dollar on the one we're adding, yeah.
Okay, so then add YG and hit apply. So we're going to look at the correlation between those, and it's tracking it over a 10-day period. And this indicator, as you apply it to your chart, you'll see 0 would be neutral, meaning they have no correlation. Positive 1 would be a positive correlation. So if it was trading 1 at the top 1, it moved the same direction. Here you see the data set lives down below 0 and hugs that 80% negative 0.8. That is a negative correlation. What that means is when the dollar goes up, the gold goes down. When the gold goes up, the dollar goes down, and they can't stay apart for too long. You'll see the occasional areas where you see the peaks on the grid. When you see these peaks like you see there. Let me see if I can get that drawing tool up here. So you see the peaks here. If you look at the peak here, and you got the peak back here. So you see those peaks are where the correlation breaks down. That can't maintain long term. And so what we see here is that the precious metals are down, 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 and the dollar over here is up, 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 up. And if you correlate your crosshairs and go back and look at it, we could change time frames like weekly. Let me have you change the dollar chart to a weekly chart for me.
Sure. Yep. Let me.
And this will change the correlation measurement. If you can do that for us.
Weekly and weekly. Now it's measuring.
And this is where technical analysis comes in real handy. So there we see the general breakdown. And so now we've got this negative correlation where you see the dollar running up and the gold running down. And this is where the correlation is really, really strong, but it will have to revert to the mean, and this would be the ideal opportunity to create a trade. And then Matt says, well, is there a trade where I could go short the dollar and long gold? You could take a less aggressive trade where you did something like a bull put credit spread on a dollar ETF, and you did a bear call credit spread on a dollar ETF or index. And you could have an iron condor with the high probability of the prices reverting to the middle on that. It would be an iron condor based off of your instruments. You'd have a bull put on gold and a bear call on the dollar, and effectively between those two you create an iron condor. That would be a less directionally aggressive approach to making money, and basically saying, well, I don't think gold's going to keep going down, and I don't think the dollar's going to keep going up. If we wanted to take a directional approach, this would be a time to look to do something. I like to do risk-free trades, and we talked a little bit about this in the last Coaches Show, maybe doing a ratio back spread. And we could look at building a trade. Let me have you bring up Mock Trader, Tim, and bring up a risk graph. I like to do the risk graphs here in Mock Trader. And grab a risk graph and pop in the GLD, Exchange Traded Fund. And are you a pro level subscriber on? Do you have Mock? Okay.
Yeah.
Let's go to the spread template and let's put on a call ratio back spread. So call ratio back spread down there. And it builds out a template for us. Now what we need to do is go manipulate our prices. Let me have you hit the button down at the bottom right, show chart. And I would look to do a longer term on this. I'd change our dates. Let's change our date out. And what we have, before you change that one to January, change the strike price from 116.50 to like 115, just to make sure we have a random. Yeah, that'll work. Okay, so that works. Drop that one down to around 115 or so. And what we're looking for is, can I sell a call to get paid, so we're going to use other people's money, and you can get paid $4.63, and then the price of buying 120 calls is just $2.32. So you actually have enough money there. You're coming up about $1.50 short, Tim. So you could go a little bit lower. If you go that far down to 110, now you can build a ratio. You could buy 3 to almost 4 of those. You'd be a little short if you did 4, but you'd have a relatively low risk trade. Now, for me, when I pick those strike prices, they have to be within a swing ratio, like a pay ratio, like how far the stock typically moves. And in this particular case, you could create where do you get the money to buy your calls. This is a little bit different than what we normally would teach people. Buying an out-of-the-money call option is not something we normally do, right, Tim?
No, not normally, unless you're speculating, but yeah.
And even if you're speculating, the problem with it is you get these low deltas. Using the back ratio spread to create this type of trade, we get paid for making a promise to deliver this instrument.
So what's our pay range here? What would be a legitimate?
I would say, without overthinking it, shooting for 120 is easy. That's old resistance.
Yeah. Yeah.
And then shooting for 122, that's the next support resistance zone. And typical swings on this one, the little swings are only a point. They're only moving about $1 or even 50 cents. The bigger swings, where you see, it'll move 2 and 3 points. So I would really kind of target that lower 120 to 122 area. The reason we go out to January is we want low levels of time decay, and we want to have a high. This has the general wiring on this is that as the prices run up, we see the out of the money calls as they move to in the money. And you can, I have no problem going with January's or even November's is possibly a little too short for this type of trade. It depends on, you can go both ways. It just depends on how fast you think that's going to move. So we're looking for that to rip up, and if it goes down, you'll notice that the leverage is set so that the pain threshold's not too high. And if you go up, you get a nice little return. So selling the Januaries to get the 803 and then buying those Novembers, that gives you a pretty strong ratio, a 1-to-7 ratio. And if it rallies to your basic target of 120, look at your return on that. That's fantastic. If you look at the bottom side, now go look at your pain. If it rips south, you got to consider how much that's going to hurt. At this type of position size, 10 by 70, look at that blue line, Tim, as it drops.
Yeah.
Kind of trace that with your mouse here, if you would. And you look at that, and if it breaks support and is running down, your pain threshold on that position is going to be in the thousands. You'd be $2,000 to $3,000 risk tolerance. So if you went down to something you were comfortable with, position size wise, 2 by 14 would be a nice little ratio on that, where you could have. Now that's a pain threshold that most people will tolerate. If it runs south, you're not going to get beat up too bad, but if it runs up like we think it should, you've got really good returns.
Well, let's just paint the picture here. I mean, using this, even if gold crashed at 110, 105 on a 2 by 14, which I think most people could fit into their money management, you're down $200 to $400.
Yeah, which is it's not gonna break the bank. It's not gonna put you out of business.
Now, and I don't think this is a high probability it hits 130, but at 130 you make 10 grand.
But you have time for that to happen. You have 2 months for that to occur.
Yeah.
And even if you pulled $1,000, your reward to risk ratio, which is and the kind of the neat thing about it is as the price moves, you have this really just nice ability to take the trade and keep it relatively risk. I like that. That's a pretty chart. So going with the January, Decembers, this is one of those things where picking the strike prices and picking the month you use, people always ask me, how do I know which ones to pick? Do you play out these graphs and you look at it and I hate to use the pun, you're looking for the best option?
Well,
And
I always describe it like this. It's kind of like when you go to the grocery store and you're picking avocados. You literally have to feel it out.
avocados. There's like they're too hard, they're too hard, they're too hard. You have this little window of about 15 minutes where they're perfect, and then they're spoiled.
Right.
So
Yeah, gotta use them. Or tomatoes or anything. It's like picking fruit from the grocery store. Everybody's got their own tricks. It's funny. You could do a social experiment where you just like video cameraed people at the fruit stand. I swear it's the funniest thing ever. Oh, little old ladies, they got their little fingernails. They tapping the top of the watermelons. I mean, I love. I'm a people watcher, Noah.
As am I. In fact, that's an interesting comment, Tim. People watching is really what a chartist, a technician's doing.
Yeah.
We're people watching, and we're spotting their personality traits. We're spotting their tendencies. And gold, the tendency has been down at 116. People step up and buy.
I love it.
And I learned about this idea of valuation in currencies. I have a new student, Tim, that I've been working with from Moscow. And in a very random series of events, in a very, very small world, we both participated in the same student exchange program 20-plus years ago. When we were in high school, at the end of the Cold War, there was this little exchange between Moscow and Utah, Salt Lake City, Utah.
Mm-hmm.
And I went and lived in Russia for a while. She came and lived in Utah for a while. And here we are 25 years later, and we're both, she's coming to learn to trade options and currency. She's ready to quit her day job. Wanting to move into trading full time. And so when I first traveled to Russia and started trading my dollars for the rubles, I realized very quickly that I could get a better rate at different places. And looking at the exchange rate, the bang for the buck in the exchange, I figured out, even though I was just a teenager, that, if I trade my money now, it's not going to be very effective. If I trade my money at this place and I see it at that price, I'm going to get a lot more buying power. Years later, I lived in Spain, and I used to do the same thing. I'd watch the Spanish peseta compared to the U.S. dollar, and I changed my money when the rates became favorable. And here, in this particular setup, with the dollar being high and the gold prices of precious metals being low, that would be a really great opportunity, I think, for people to go pick up their purchases on precious metals. So I expect a revision to the mean on these, and structuring that trade, relatively risk-free, Tim. I like it.
Yeah, and you guys are listening to the Coaches Show. I appreciate the people who are attending live. If you're watching this back on replay, feel free to hit us up on Twitter at Tackle Trading, or email us, team@tackletrading.com. Noah, one thing I love about the trading community is the idea of entrepreneurship. And I don't even know if I ever say that word right. I think I say it differently pretty much every time I say it. Entrepreneurship, is that right?
It might be.
I'm a kid from the sticks, man.
Yeah, it's kind of like entrepreneurial. I like it. Entrepreneurial spirit.
Entrepreneurial spirit, and it is that thing about team. Matt, before I know we've got you on the road. You're on your cell phone. Before we lose you or drop the call, I did want to ask you about the newsletter for a minute. It was a great read. Did everybody read that, by the way?
Thank you.
I do take minor exception to the use of BYU Cougars in that video clip.
Honestly, I put it in there specifically for you.
I know. It's good. It's good.
I thought you would have. I thought you had, the BYU hands in the middle, looking all, teammates and team spirit and whatnot.
I thought that was the Yahoo team like for a minute, like Team Yahoo.
No,
that was.
You know exactly what it was, buddy. But both of them having a good year so far, both Utah and BYU. So we'll see kind of how it all plays out.
Yeah.
But the newsletter, to me, it's an opportunity for us to talk about things that are on our minds. And one thing that was on my mind when I was sitting down on Sunday, and I was watching the Dolphins play, and I was writing the newsletter and just team, and I grew up playing sports and whatnot, and being a teammate meant so much to me growing up. Being part of a team, having that type of unity and whatnot, and that's what we're doing here at Tackle Trading. Is we're a team. We're all there to help each other out, and so I wanted to give it a little bit of a team feel to it. But I also talked about some of the things out there that are being impacted, 401ks, IRAs, whatnot. Talked about technically this week. I did not see this week being a technical-driven week, so I didn't spend much time on it. Talked a little bit about economic analysis this week because I think it's a major economic week with consumer confidence, manufacturing, unemployment out there as well. I also talked about the whipsaw effect, buy the dip mentality that's dominant in the market right now. Because I was getting a lot of questions there on the website and to my email from students wondering, what in the world is going on? Every time the market goes down, it doesn't keep going down, and it just goes right back up. And it's one of the reasons that's the case is there's two mentalities that are playing out right now, and one is the hedge fund buy the dip mentality. And until that cycle is broken, we're going to continue to see the whipsaw. We saw it on Monday. We saw it today, both down at the open, come right back late an hour later. That buy the dip mentality is very prevalent in the market, and it's creating a little bit of a whipsaw effect out there. So I talked a little bit about that in the newsletter as well. Throughout a couple quotes from Warren Buffett that never hurt. It's just, you want to take some time into writing that newsletter because, in our opinion, our newsletter is going to be best in the business.
Well, I found it really powerful, and some of the stuff on team and philosophy, I mean, those things really resonate with me, and I would love to dig into them. We got 9 minutes till the close, so why don't we leave that for a podcast? When are you going to be home, Matt? When can we get these guys a podcast out? Tomorrow?
We're going to podcast tomorrow. We'll get at least 2 podcasts out in the next 3 days, I would say.
All right.
I'll check with you and Noah on your schedules, and we're definitely going to get a podcast tomorrow, and probably one on Friday. The people are demanding it, man.
Oh yeah.
I'm getting emails and wonder, why am I on vacation? That's not fair for the podcast.
I've gotten plenty of them myself, and I'll tell you.
I don't understand it, dude.
And let me give everybody a quick tip here. Ali, Mario, you should be getting emails from us reminding you when the newsletter does hit the press and that you can go in and log in and read that. If you're not reading it, spend some time this week and go back and read Matt's newsletter from the 29th. I thought it was absolutely fantastic. Matt, I want to ask you about a few of the items you put in here. One, Alibaba.
Okay.
What happened with that stock?
Baba. What a joke. Take this for what it's worth. And guys, real quick, a reminder on the Coaches Show. The Coaches Show is it's an opportunity for the coaches to get together to talk about things they're doing. And some of it's a little overwhelming. I get it, but it's, when Noah's talking about back ratio spreads, that's how he would approach making money on that. We're going to have a lot of other things coming down the pike in the trading room where, we got some basic content, we got some basic webinars and whatnot, and obviously we got a lot of things coming down the pike, guys. The Coaches Show is just it's us getting together as coaches talking about what we're doing in the market. So in terms of Alibaba came out IPO about a week and a half ago, and the initial basically for a month before Baba came out, I said I was not going to touch it. I think it was going to be overpriced. It reminded me too much of Facebook. And also, for those of you who don't know, Baba got delisted on the Hong Kong Stock Exchange, the HSE. And one of the reasons they got delisted is a little pump and dump scheme that Alibaba went through when they first initially came out public. And all of a sudden, they were allowed to dump all the shares to the open market, locking in profit, basically. And the SEC and Wall Street made an agreement with Alibaba recently to allow primary shareholders of Baba to dump the stock on the open. And that's not what they typically do, guys. They typically force shareholders to own the stock for a month to 2 months before they're allowed to dump the stock. And so I'm a little concerned about pump and dump there. But Baba came out initially, the offering was at $66 and $68 and $70. It actually opened up, and I think the initial opening price was $92, $93, T. And on the opening, it was the 11th biggest company in the world. On the opening, it was the 11th biggest company in the world. Eventually, it got to like the 6th biggest company in the world. We're talking the likes of Microsoft. We're talking the likes of Apple. We're talking the likes of these massive international conglomerates. And on the opening price, they're listed at those same levels. And I just thought that was a joke, to be honest with you. I'm not saying it's a bad company. I'm not even going to go as far as saying it's a pump and dump because they do have a lot of social media there in China. They do have a lot of Alipay and whatnot, a lot of business models out there. I just did not see it valued as a top 10 company in the world.
When did they open up with options?
Years ago.
The options just came online, Tim. They've got them right now.
I think they came.
They just opened it up.
Weird too.
So, Matt, I have a brand new student that I'm working with who's very green, and they went and they got kind of excited about the IPO of Baba, and they are the person that a pump and dump scheme would crush. This is a student who's not affiliated with Tackle Trading, one that I've worked with another organization, and they asked me a question about Baba and what I thought, and they went in and bought $60,000 worth, 700 shares of Baba on the IPO and got filled at about $90. So right now their position's down just a tiny bit, not a big deal. However, if that stock price got dumped and moved down like Twitter did, moved down like Facebook did, they just cut their dollar amount in half. They got crushed. And
honestly, Noah, it's sad. They actually got a good fill rate. A lot of people like them that came in didn't get filled till $95 to $100.
Yeah. So you want to be real careful. I don't like IPOs for trading just because they restrict things. You don't know what's going on. I won't trade them until I've got.
There's so many deals being done in the back room that we don't know about. And so we just IPOs 15 years ago, that was a very different flavor than it is today. IPOs today are as prone to go down as they are to go up, and I really see IPOs today as an earnings report. It's a complete crapshoot right now. It's a gamble in the market, and especially with the Baba IPO, there was so much hype coming into it. I am not shocked to see Wall Street and the Baba primary shareholders and the hedge funds lock in initial profit, which they got filled somewhere in the 60s ranges. I wouldn't be shocked to see them lock in some profit there. I wouldn't be shocked to see the primary shareholders, which basically overnight became billionaires, start locking in profit on that. And for all the consumers out there that got locked into the hype of the Baba IPO, I would not be shocked to see them get responded to the same way the Facebook people did, the same way the Twitter people did. And so, it's a little concerning for me. I'm like, give me a month to 2 months. Give me some information out there. Let me see what's going on with the insider trading. Let me see what's going on with support and resistance out there, and then let's make some decisions out there. Because you don't. Here's the reality, guys. Baba's options are going to be lush with cash.
Well, hold on a sec, though, Matt, because I'm looking at that right now. You don't have the good fortune of looking at my screen. I'm actually pricing straddles. I thought that would be the case, too. Guess what? The straddle for the 17-day option is only pricing out at $5.50. For a $90 stock, that's not that much volatility for a new IPO stock.
Do me a favor. Sell me a November 20 delta on the put side.
Okay, November. Hold on. We got 1 minute till the market closes when I run these numbers.
I'd be shocked if it's not 18, 20%. I'd be shocked if the Roy.
Well, I'm sure there's money out of the money. I'm looking at the straddle too, though. 80, 75 bull put. You pick up 16, 17% ROI against a 20 delta.
17% ROI, exactly, and that's what I'm talking about. What?
I don't know, man.
You need to buy the IPO, guys. You need to learn how to trade.
Yeah, I actually think I'm going to run some numbers. I'm even going to put this on my to-do list for tomorrow. There's not enough time to get a good fill this late in the day on a new stock like this.
What's the APR of Bob? No, you can't do that right now. It's
volatility analysis on Baba. I'll put a post up in the blog.
If you sold a bull put spread on Twitter or Facebook or GoPro, every month since the IPO came out, from the options are available, would you have made more money on the IPO of stock ownership, or would you have made more money on the selling of the 20 delta out of the money option?
Probably, if you know how to manage it, you're selling volatility, you would have done better. And what's impressive here, when I loaded this option chain, Noah, I didn't expect it to be this liquid. I mean, it's ready to roll.
Yep. I guarantee that thing's going to be moving. It was the biggest IPO. I don't know. I mean, ultimately, it was a bigger IPO than Facebook was.
Yeah.
Well, this is as big as an IPO as Google. This is a big IPO.
I would say so. I think it's since Google.
Put it on your watch list, guys.
But the key is not running out.
And it goes up to Google. I just want to make sure everybody's clear on that. Just because we say it's as big doesn't mean it's going to be Google.
Or go up, or, I'm not even predicting direction. I think it's going to move. It's consolidated from the open. It's put in a little triangle. If you were to draw some lines on that, Tim, it's not sure whether it's coming or going at this point in time.
No, you're one of the best technicians I know. And in the newsletter, I basically said the two levels and this was a couple days ago, the two levels that I was most concerned with from a technical level was $100, because that's what it hit up to initially, and it is a significant whole number. And number two was the $90 level, which was an intraday support level after the initial IPO. I know it did track underneath that just a little bit. But from a technical level, in terms of just if you were going to trade directionally right now, talk to me about where you would be a buyer and where you would be a seller on delta-type trading.
Okay, so when you go out of the consolidation, so you're looking at the chart here, Tim, you got that consolidation. Symmetrical triangles lead to breakouts. Consolidation leads to breakout. If I would be a buyer above 90 and a short seller below 88, and betting on direction, and I would start with small positions at first, and the only thing you have to worry about on a consolidation breakout is if it shucks and then jives. It might pop up one direction and then cross back the other, which is not as common as a clean breakout or a breakdown. Direction unknown, very rarely do you get a whipsaw where it'll pop up and then run down, or pop down and then run up. If it breaks that trend zone and starts taking a trade above 90, 90, 50, hardcore triggers around 90, 50, 91. And then on the short side, 88 is a pretty clean price point. And at that point in time, I'd go high delta, but I wouldn't really want to stay in trades for more than a one swing cycle, because after that initial break, it's going to...
But the guy but the trader you're talking about, who got filled in long-term trade on the IPO, I don't see how that's a winning strategy long-term.
No, it's scary.
And honestly, and I'm going to say this outright: if they lose money, they deserve it.
Well, it's funny.
Their enthusiasm got ahead of their knowledge and their confidence.
Well, the thing is every now and then that works, though. That's the hardest thing. I got to tell you, the most profitable story I ever had was a guy getting dumb lucky. No, not for most people, but every now and then some guy pulls a rabbit out of the hat. I had a buddy. He works at Bank of America as a mortgage. He actually manages one of their bond portfolios. He's in Texas now. He was living in New York at the time. When the market crashed, he liquidated all of his cash that he could. He bought $500,000 worth of stock at BAC when it was $250. Sold it at $17.50. I mean.
Well, and that's the thing is it could be one of those things that pans out, but the cost of ignorance is potentially huge, and
that's a winning lotto ticket, T.
I know. That's what all I'm saying is everybody's got their dream. I don't want to buy into a dream though, and it's not what I'm recommending. But I have heard some crazy stories over the years.
Well, yeah. We all have those crazy stories, but the reality is the probability doesn't win out long term.
Yeah.
If he behaved like that without true knowledge, whatever he made, he will lose.
Well, he might have had knowledge of Bank of America because he worked for their portfolio book, and they actually weren't in as bad a shape as some of the other banks.
Did he stay in Bank of America when Bank of America lost 60% of its value in 2010, 2011?
No, he just bought them in 2009. It went to the like 17 in early 2010.
It
Yeah.
also went down to 7. It also went back down to 7 in 2011. You know,
Well,
good luck.
that's
Good luck with that.
that's about a Warren Buffett strategy. It's a long term. It's a hold. It's a buy something that they feel is fundamentally valued, and they thought to themselves, "Oh, that's such a good price. How could I lose?" Well, the
Yeah.
answer is it keeps going down. The problem with IPOs is the valuations are so subjective,
Very
and
difficult.
so buying and holding, yeah, sure, long term it could pan out, but long term it could not pan out. And the problem is they have the strategy simply lacks an exit strategy. It lacks a risk management. And so at a minimum, she should be buying protective puts to ensure her money. I mean, she put in, if you put in 60K into something.
Oh yeah, insurance.
I don't care who you are. You better protect that nut.
Yeah.
So
Yeah.
Yeah.
Well, they probably don't even have a stop loss now.
oh, absolutely they don't. Absolutely no, they don't. So one of those things you got to have an understanding that it could go either way, and you don't want to see it. If it goes down and it drops down and goes down in half like Facebook and Twitter did, you don't want to ride that down, because then you have to hope and pray it comes back up. You'd be better off waiting for it to bottom than buying, finding something that gets crushed and then picking it up when it finds support.
Well, that's the thing. Even with BABA, you're going to have so many opportunities to get in at a good level. You're going to have a ton of opportunities where you're going to have a higher probability of success than you do getting into it right now.
Yep.
The
consolidation pattern?
Let me think real quick out loud here. So this is one of your clients or students, I guess, that you're talking about that owns BABA.
Yep.
She could probably put on a put spread using the January 16 option. She could sell one of those puts and buy the April 15s, even though this ain't going to protect her the whole way, like a 25 delta. Do this.
It protected against catastrophic loss is what we'd want to do. And so creating a strategy to protect. And really, one of the things is this is what I actually said to her. Just compare and contrast. Put in the 700 shares, Tim, and just do a simple strategy. Don't get all complex. Just go put in a simple put, like a 10% out of the money put option for January.
Let's do January 15th.
Okay.
Then.
And so if she were to buy
the 80s,
an $80 put, she's going to spend about $330 per $325. It'll create a protective put, and she'd need 7 of those. And with 7 of those, look at how much money she has tied up, and look at her delta, look at her gamma, look at her theta. So she's got a 512 delta. The put protects her a little bit. The protection does not kick in fully until it gets down below 80. And she has unlimited upside potential, but she has $60,000 tied up into it in margin. You got quite a bit of money tied up in that. By comparison, just go buy a January 2016 leap and look at the risk graph. And let me just see you go add a simulated trade, and just buying a long-term leap at the money, just buy the 85 or 87.50 leap, you're going to spend $1,600 per share, $1,670. You pick up a handful of contracts. You have the exact same risk graph. Go pick up 5 contracts on that. And with 5 contracts, she's tying up $8,000. And look at her delta. Go a little bit higher. Go 7 contracts. Control 700 shares. And then by comparison, look at her delta. Her delta is 422. Her theta is very comparable. It's actually a little bit lower. And she has the same risk graph, but she has less money tied up in the trade. Capital allocation, one of the big problems with being uneducated and not knowing what you don't know is you could be using your money more effectively.
Yeah. Yeah. You guys have been listening to the Coaches Show here. We're about to wrap up in the next 5 minutes. Noah, this is the value of knowledge and training. This is a great comparison just between cost and opportunity. If somebody does want to play Baba, and even if you don't have the training to do something really complex, maybe a leap option which gives you plenty of time and control. Heck, you could even buy it out of the money a little bit, probably to reduce your cost. And you can do a lot of really creative things here. I'm still thinking, trying to wrap my head around what to do with that stock. It's going to be on my watch list. I kind of just ignored it because I thought it was just too much noise around it.
Well,
but now that I know that the options are open.
I'll tell you guys this. Out of all the things I'm shocked with Baba so far, it's how quickly their options are listed. I mean,
normally you don't see that for 60 to 90 days. You don't normally see them that quick.
I was shocked they were on GoPro within 30 days, and now we're looking at Baba here, and they're within a week.
2 weeks. Yeah.
That's ridiculous.
It's crazy.
They're getting quick on those options, especially how liquid they are right now.
Yeah, they are liquid too. What are you enjoying about the clubhouse, Matt? Just a couple last thoughts.
Honestly, I just love the communication on the clubhouse. I think it's absolutely awesome that people are getting out there and they're communicating. They're asking questions. You're now seeing, students, teammates out there answering other teammates' questions.
Yeah.
Yeah, and that's the vision I want to see is the crowdsourcing of information, the sharing of ideas, the sharing of help. What do I do with this strategy? Hey, check out this trade I found.
And you're starting to see there's a few members out there that are pretty active on it, and I just think what Eduardo's doing out there, what Owen's doing out there, what Mark Carroll now he's out there posting as well. I just think it's absolutely awesome that they're going to there every day, getting the help that they deserve. And you know what? Every one of us have that same mindset. But I'll tell you, when I see Eduardo and Mark and Allie and all these people going out there trying to change their lives, get the help they need, I'll do whatever I can. Yeah. I'll log on to that website at 1 a.m. just to answer their questions because they're putting in the work. We'll put in the work. We'll match up. We're a team, and that's what teammates do.
Well, and the big thing, and I want to encourage everybody just as we're closing up, and then I'll give Noah the last word, is guys, just participate. Whether it's in these coaches shows, we're going to do a monthly expiration party here in a couple weeks. I'll give you some feedback. If you have requests on what you'd like to see us do on the websites or questions, I talked to all these guys over the weekend. I got a whole list of topics, Matt, that I'm going to blog about over the next week or two regarding theta decay and strategies and all kinds of stuff. And Noah, we're going to be working on that trading room as well, and kind of building in some of the strategies and teaching people how to do little things. So it's a journey here, and we appreciate that everybody's a part of it to start out. Noah, last thought, and then we're going to wrap it up.
Well, this is with tackle trading. We're in our infancy. It's been a soft launch. We haven't even done an official launch of the site per se. We've got our charter members who are joining eagerly. My thoughts are just this: the community, in the sense of this community, is got no place to go but up, more active, more exciting, more entertaining, more educational. And I'm really excited about what we're creating here. And again, I think that what I want to leave the thought with everybody, is you're going to get out of this what you put into it. And if you want to get the answers and the information, then post it on the Clubhouse, ask the question, create the dialogue, and that's how we're going to generate excitement and enthusiasm, is simply through participation.
Absolutely. Matt, you drive safe. Get a hold of me when you get home, and we'll set up a podcast.
Yes,
Noah, it's great to have you here. Everybody, thanks for attending. We really appreciate you. We'll get this video up on the site here today so that you can watch it back on replay. And if you are watching this back on video replay, make sure to hit us up on Facebook at Tackle Trading, Twitter at Tackle Trading, and also email team@tackletrading.com. And as always, just like we said, participate in the clubhouse.
Just one quick comment, guys. Great coaches show, great conversations. And also, guys, if you're enjoying what we're doing on Tackle Trading, whether it's the coaches show, the expiration show, the podcast, the videos, the blogs, the clubhouse, whatever it is, guys, get it out there in social media. There's so much negativity out there in the world. let's spread the good word of tackle trading out there as a collective, and let's build our teammates and build the tackle trading team collectively. I just want to say thanks for all those people that are out there doing that already. Thanks,
Awesome
everybody.
stuff. Yep. See you
Awesome.
guys.
Later, everybody.